Welcome to the latest edition of Fitch's Virtual Investor Series. I'm Susanne Matern, Head of European Structured Finance, and today I'm joined by Duncan Paxman, Senior Director in our EMEA RMBS team. We are going to discuss the mid-year outlook for 2023 for European RMBS and the housing markets. So welcome, Duncan. A year ago, we already discussed the impact of the rising interest rates and cost of living crisis, and these are still the key risk factors affecting European RMBS. A year ago, we said the most affected sectors may be the UK non-conforming sectors, Spanish legacy, RMBS, and Portugal, because these are the floating rate markets or the markets with slightly weaker borrowers. How has this developed?
Yeah, so in terms of those markets that we identified, in UK non-conforming, we've seen total arrears increase by around 4 percentage points. In legacy Spanish pools, we've seen arrears increase by about 2.5 percentage points. And in Portugal, then we've seen relatively small increases in arrears. So the markets that we identified, two of those three have seen some deterioration. In terms of the wider sectors within European RMBS, then performance deterioration has been very muted. So beyond those three we identified, it's been quite a solid performance. Now, we're still slightly unsure as to whether that's the result of a slower transmission between interest rate increases and arrears, or whether it is a genuine stronger borrower performance as a result of the better credit underwriting that we've seen in recent origination. Going forwards, we think that UK interest rates will peak higher and probably later than Eurozone interest rates. And as fully floating rate sectors, we then see UK non-conforming as still the single most exposed sector in EMEA RMBS.
Mm-hmm. Let's stick with the UK. In terms of credit supply, we thought that could contract, particularly in the UK. Is that the case?
So credit supply in the UK has actually held up pretty well over the last 12 months. If you look at the buy-to-let sector, then new lending is around about 2 billion more than it was in the previous year. And that's led to a stock of outstanding loans of about 296 billion. In owner-occupied, then it's broadly consistent year on year, and that's led to some slight growth in stock. So credit supply has actually done quite well. If we look at mortgage approvals data, though, for the last 4 months, then each of those individual months has been quite significantly lower than the equivalent in 2022. So we do think that contraction in credit supply is coming in 2023, and we think that the drivers as to how large that contraction is going to be will be, firstly, interest rates, and secondly, house prices. If you start to see a larger contraction in home prices, then that could undermine confidence in the housing market, and then we could see lower mortgage supply as well.
Mm-hmm. Let's stick on house prices. So what are our expectations for the main European RMBS markets? So
in Netherlands and the UK, then so far since December, we've seen around about a 2% contraction on average in home prices. We think that for Netherlands, the calendar year will see around about a 6% price contraction. For the UK, we think that'll be around about 7%. Spain, by contrast, is a little bit of an outlier. We still see there to be some room for price growth in Spain. And we think, whilst we've revised the expectation downwards, we think that up to 2% is still possible in that market. One of the things that people ask us a lot is where we see the trough in house prices. And for most continental European markets, we think that will come sometime late 2023. For the UK, because of that later peak in interest rates, we think the trough in home prices now is more likely to fall in 2024.
Yeah, thanks. That makes sense. So far we have discussed the asset performance side. What about the impact on the ratings we have in our European RMBS portfolio?
Yeah, so our ratings outlook is stable across all sectors. And the reason for that is that we still have some headroom between the assumptions that we use in our criteria and our expectations for performance. Until such time that performance deterioration erodes that headroom, then we should still see stability in the ratings.
Wonderful. So finally, are there any risks to watch over the next 12 months?
The two biggest risks to watch, I think, over the next 12 months, firstly, interest rates. Do we see a higher for longer story? That would be negative for mortgage performance and also for house prices. And secondly, the labour market. In Europe, we've seen very strong labour markets, which have helped to protect borrower performance. If we start to see rising unemployment, then we think that could quite rapidly translate through to higher mortgage arrears.
Thanks, Duncan. Thanks for your insights. And thank you for joining us. For more information on European RMBS, please visit fitchratings.com. And if you have any questions, please send an email to the address on the screen.